We still have a lot of interesting speakers and sessions and topics to be discussed. Hello? Can everyone please have a seat so we can continue with our schedule? As Yazan said, these conversations have just started. لسه ما خلصنا. All bubbles eventually burst. Is there a bubble in MENA with over valuations and free government money? Will this hurt the ecosystem and the future investments and exits? When will the MENA investment bubble burst? A question that most of the entrepreneurs and investors think about. Please welcome with me our honorable guests, Mr. Mohammed Rasbi, Managing Director at Oman Technology Fund, Hasan Haider, Founder and Managing Director at Plus VC, Tambi Jalouqa, CEO at Propeller. And this interesting session and this interesting question is moderated by my friend Omar Shabaan, co-founder and CEO at the space. Please welcome our guests.
We'll give it a minute. Okay, now it's working. Can you hear us well? Yeah? Good. We'll just give it a second for people to settle and sit so you can enjoy the conversation. أهلا وسهلا بجميع. أهلا وسهلا, dear friends.
Hello, Omar.
It's good to see you. It started counting already. That's not fair. Cool. So I think, yeah, everyone is settled. Good morning, everyone. It's good to be back in Jordan. I studied here 20 plus years ago, so I'm always happy when I come back here. So when you look at the topic or the title of the panel, it could be a bit scary, right? When will the investment bubble burst in MENA? So this is just a couple of questions to be raised. The first one is there really a bubble? As Razan said. And the second question is, if there is a bubble, would it burst? And what is a bubble to start with? What is an investment bubble? Does that term exist? Is it true or not? And if it is to be burst, is this a good thing or a bad thing? Is it good for the startups? Is it good for the investors and so? So in order for us to answer the question, we will take around 20 minutes of going through the history of the investment in MENA region in the past 15, 20 years when this ecosystem started shaping up. We will talk a little bit with the VC's representatives here about what they have been observing in the past couple of years, maybe especially post-COVID, when it comes to the investment appetite, sentiment, incentives, motivations. And then we might have a clearer answer whether is there a bubble, what is a bubble, and if it's going to burst or not, and if it will be, is it going to be a good thing or a bad thing? So I welcome you, Tambi, Hasan, and Mohammed. I think your credentials are presented in the back, but all of you are well-esteemed and well-respected VCs that have been doing a great job in the region for the past years. I had the honor of working closely with you in various capacities. And as Razan introduced me, my name is Omar Shabaan. I come from Saudi Arabia, and I manage something called The Space, which is a brand of co-working spaces in the kingdom. So let me start with Hasan, if you don't mind, Tambi, since you're the one closest to me. But Hasan, you've been in this field for at least, to my knowledge, more than 10 years, 10 to 12 years, if I'm not mistaken. I remember you, one of the very early phases when I came to this field, like around 10 years ago. You've been doing a phenomenal job all across the region. Can you give us a brief history of the investment appetite and the investment in the ecosystem in MENA if you will?
Sure. I think thanks for having us here. Yeah, I'm a bit of a dinosaur in the ecosystem, I guess. So I've been doing this for about 12 years now. I think that the region's ecosystem and history, really, the modern interpretation was kickstarted around 2009 when Maktub was acquired by Yahoo for about $100 million. So that acquisition really kickstarted the whole ecosystem because it started people believing that actually, yes, you can make money investing in tech and startups in the MENA region, and there are exits that will happen. Like $100 million exit at that point in time was just phenomenal. Like no one expected that. We started to see some incubators and accelerators started to form. Jordan was for sort of the forefront of that with Oasis 500, with angel investment projects happening here. And then you started to slowly see the uptake in other markets. Flat Six Labs started launching in Egypt, and we started to see some angel groups launching around the region. So it was very, very early. Like startups at that point in time were raising $50,000, $100,000. That would last them a year. They'd sell, 33%, a third of their companies for that 100K that they would raise, and they'd start building something based on that. I think those were really early explorers or pioneers in the ecosystem. A lot of them are no longer in the ecosystem, but a lot of them have continued to build themselves. Fast forward a little bit, I think the history of the region is sort of jumps, and it's jumps and exits, because that's when the high watermark changes of what you could possibly exit for. And so the next one, I think, was Talabat being acquired by Delivery Hero in 2015 for about $200 million. So that was the second high watermark, and it was like, okay, great. So we're starting to see above $100 million, $200 million exits happening. A couple more happened in Kuwait, Carriage, For Sale, and a few others in that period of time. And no one really looks at Kuwait, but they've had quite a few exits in that market. And then, fast forward a little bit more, you saw the acquisition of Souq, which was actually a spin-off of Maktub by Amazon for almost $700 million. And so you start to see these step ups of 100 million, 200 million, 700 million, and then fast forward even more to today, where you saw. You fast forward a little bit more, and then you see Careem. The big one, which is Careem. Yeah. So Careem being acquired by Uber was really, $3 billion actual exit was a phenomenal sort of level for us to all aspire to in the region. And then, you saw this year the first sort of really major IPO. Major IPO. Okay. Just triggers. So I think Jahez was the one that started things sort of moving forward in sort of, it was a successful IPO, continues to do well in the market, $2.4 billion, shows that there's an exit path in the secondary market in the Saudi ecosystem. And so you see all of these triggers, and they're like jump ups, and that's really how ecosystems evolve. There's like these jumps that take place.
And hence, is that what maybe triggered the notion of having a bubble? Because, of the jump ups, usually with every step up, there's always a step down. That's like the natural cycle of life. So do you think that this is where the sentiment is coming, or is it something else? Because, the continuous jumps will definitely have an adjustment or a correction or so.
I think until about 2 years ago, we weren't seeing inflation and valuations as much as we started to see them trigger around 2020 really is when things started to really get out of hand. And I think what ended up happening is that we were starting to see some exits, but every deal was starting to be priced as if that was going to be $1 billion exit. But that's not the case. Like, as VCs, we need to understand that you need to price things more reasonably in order for you to generate returns for your investors. Yep. And I think two factors led to that. One is there was a lot more funding that started to come into the ecosystem in terms of fund of funds programs that were actually beneficial to the ecosystem. I think we needed more VCs, we need more funding, but the flip side to that is it was in slightly more inexperienced hands, and so you have a founder that's inexperienced and an investor that's inexperienced, and so you multiply that inexperience together, and you get basically, things that don't quite make sense.
I wanna capture this point. You spoke about talent, and Tambi, you come from an ecosystem that is full of great talent. I mean, we all admire what's happening in the Jordanian ecosystem. It has graduated some of the best startups in the MENA region and exported them also to the region. What's your observation on that, and talent specifically, and if you can link that to what Hasan has been describing and what's happening in the investment world in the past couple of years?
So talent is abundant. A lot of people are having experience by starting startups and then failing them and then reigniting their passion in a different place. But I would say that talent is also sometimes, as Hassan mentioned, being pulled by market conditions, which is what leads us towards a bubble usually. It's when people start assuming that it's all a valuations game. It's all about getting the best valuation, which although there are great people that are building great products and great teams, sometimes they might be mistaking about the way to.
But hasn't this happened in other markets, for example, from your observation?
It did, by the way. We do follow global markets. And the whole move towards entrepreneurship is not something unique in the region.
Yeah.
Maybe we started to be an active part recently, which is great. I believe that finally we are participating in the global entrepreneurship scene. But yeah, we are following the global markets, and that trend towards crazy valuations started in 2020, and now we are at, I don't know if
A
we're
correction or an adjustment? What do you want to call it? I mean, rather than burst.
I'm trying not to use the word bubble, but yeah, it's a time for talent to reflect on what do they want by raising capital and how much money do they need.
We will talk about that. We'll talk about forecast and what do we expect in the shortcoming years. But Mohammed, let me go to you. You come from an ecosystem, although OTF works across MENA, the ecosystem in Oman is quite vibrant and young, and opportunities are great. Do you share the same analysis, sentiment, or for example, in your market in Oman, you're seeing things are still on the step up phase, if you will?
Well, first of all, thank you very much for having me here today. Yeah, OTF does invest in the MENA region, but within Oman specifically, I think we're still realistic, and this has to do also with our nascent VC ecosystem as well. So we're still getting, I guess, realistic valuations. We haven't had any crazy valuations in Oman so far. Having said that, I think one of the challenges is that when you set up funds and those funds are kind of dictated to invest within a certain geography, sometimes that creates that inflation of valuations. And I think that's something that needs to be addressed so to avoid any potential, harm, because at the end of the day, what will happen is that most founders will start getting unrealistic valuations that will make them almost impossible to reach the next milestones and their next funding round. And that is something that, as Hasan was saying, you have inexperienced founders, and most of the MENA region, maybe Jordan is a bit different than Egypt, but most of the MENA region, most of the founders are first-time founders, regardless of how many years of experience they've had. We haven't had that ripple effect of second-time and third-time founders. Hopefully I'm expecting within the next 5 years we'll start seeing that. We'll start hopefully seeing more mafias, such as the PayPal mafia, what have you. We had the Korean mafia, and I think from that you're going to see more sophisticated founders that are more realistic in their valuations. But then also hopefully we'll see more VCs, hopefully experienced VCs, that are realistic, and hopefully they can educate the rest of, let's say, the value chain, angel investors, family offices that are not trying to follow the fad of let's increase our valuation so we can say we've raised, we invested in companies that are $100 million or what have you. So I think that's within the region, but within Oman we're still seeing realistic valuations.
There is definitely a role for VCs on educating the market or setting the norm, being the lead in the investment appetite in the region, especially for startups. But you touched something on founders and education. So would you agree, the three of you, and maybe Hasan, if you want to touch on that, the funnel of startups or entrepreneurs or excitement about entrepreneurship in the region is at its highest peak? You can assume, for someone who's been in the region doing this for, again, 12 years plus, today the funnel of having good founders and entrepreneurs is big. So as a result, wouldn't we expect better quality of founders, better entrepreneurs and startups across the region?
Yeah, I think we are seeing better founders, better quality of founders. I think what the shift that happened in mindset over the past 10 years is, 10 years ago, everyone's like, I want to go work in a stable job. I want to work in a corporate. I want to work in the government. I don't want to, what is this entrepreneurship thing? There was one of the founders early on in the ecosystem. He's like, I think I need to get a job. And I was like, why? Like, your business is actually doing really well. And he's like, no, I want to get married. And my father-in-law, potential father-in-law, is like, you don't have a job. and so things like that were
so
like,
founder is not a job, huh?
no, it wasn't. At that point in time, it's like, well, you're unemployed in my eyes, So, so things like that were happening in the early times of the ecosystem. But now, there's been more acceptance of VC, of being a founder. It's more in the broader mindset of the broader society that yes, there is opportunity here. You can go, you can build a career, you could do very well as a founder. But yeah, early in the ecosystem, there was this impression that you basically couldn't get a job, and that's why you're starting your own thing.
True. So we did establish that the investment appetite in the region is growing through a transformation. Call it an adjustment, so we can have a more nice word to say. Is this adjustment, Tambi, good for the market, bad? Is it good for the VCs? Is it good for the startups? Is it good for the ecosystem as a whole? Is it bad? What's your take on that?
I think it's good for the market, by the way, because at the end, it's all about creating profitable, successful businesses. It's not about creating the biggest valuations, by the way. So maybe an adjustment in what KPI matters is something that was going to happen, and it happened. It came from the market. Maybe it didn't come intrinsically from us, but I think, yeah, it's a good thing because a lot of companies will start focusing on what's profitable. A lot of investors are going to be looking similar to what's happening in the public market. People are like, how much cash does this public company generate? Same thing with the private markets, and I think that founders will, a lot of, I don't want to say fake companies, but a lot of companies that have been propped up are going to have trouble.
More challenges.
More challenges. So the less money you raised, you're going to be, the less price you asked for in the last round, you're going to be more, your likelihood of raising again is going to be higher.
And will this attract more international investors to the region, in your opinion?
I think it will, especially ones that have been burnt by doing they reached out into the region and they've been burnt. So looking at companies with better unit economics, companies that are doing things in different markets, trying not to focus on one single market, priced right, I think global investors will come back again.
Mohammed, you work in an entity that also has, a developmental role. You are stimulating the ecosystem in Oman, in the region. There is that developmental role. Does that contradict by any means with the what's happening in the investment thesis? Does it contradict, for example, with having these valuations going up, or this is something that you do independent of how these valuations are going?
So for us, because of the stage we invest in, so we invest in pre-seed, seed, and growth, or whatever growth means nowadays. But at the end of the day, because we're still early on, and because of that, I think at the moment, personally, I think it's the best time to invest, because you're getting a lot more people, more hungry founders that are more realistic, and then that's one side. And the other side, you can actually hammer into their head that you actually need to be profitable. Previously, it was more of just let's increase our traction, regardless who cares about profitability, that will worry about that in the future, so they don't care about the unit economics. So I think we're going back to this correction that we have. Actually, it's going back to the basics of actually generating revenue and being able profitable. So the founders themselves can have more control of their startup versus being under the mercy of the investors. So I think this is getting the burst, even though for some of the founders that got burnt, the others, let's say the larger pool of founders, I think they'll be in a better place to be able over the next, let's say, year or two, to be in a better position.
Actually, you touched on a very important point that I want to ask Hasan and Tambi on. You spoke about the stage that you invest in, which is pre-seed and seed. We have one of the pre-seed good friends, Mohammed in the audience, who invests only in pre-seed. Hello, Mohammed. So, question to you: are you seeing this adjustment across all series? Are you seeing it in pre-seed, seed? Are you seeing it Series A, B? Seeing it pre-IPO? Hasan spoke about the IPO market, secondary markets, and how it's really stimulating an alternative exit, which is great, and exits are very important, obviously, as you said, Hasan, for the story. So what do you think? Are we seeing this adjustment across the rounds? Maybe Hasan, if you want to start?
Yes.
Yes.
So basically, the initial hit that we had in our region was in markets which were dependent on the global market players for late stage funding. So markets like Egypt immediately started to feel the pain because most of the Series B, C growth stage funding was coming from abroad. And so a lot of that funds that was coming in, when it stopped, when all the VCs in the whole world stopped investing, that hit the late stage
But
deals.
what about the early stage?
The early stage took a bit longer, but now what we're seeing in the early stage is that, yes, there is a readjustment of valuations as well. When at the height, earlier this year, we were seeing seed deals at $15 million valuations. Now it's more around a realistic number of around $5 million post.
Okay.
And so this is a much healthier place to raise, because in order for you to justify your next round, you need to look at 2 to 3x valuation from where you raised that. And if your next round needs to, if you're at seed, you can kind of raise on lower terms. You're still getting started. People will take a bet on you and the team and stuff. But by the time you get to Series A, you really need to have proper metrics, good unit economics. You need to show growth. You need to show the numbers. And in order to show numbers to justify your valuation, it'll be much easier if it's a lower sort of valuation than it is a higher one. So I think a lot of the founders that raise seed rounds or early rounds at really high valuations kind of shot themselves in the foot. Because in this environment, in the funding landscape that we have now, someone that raised the seed round at $15, $20 million valuation, in order for them to raise their next round at a $50, $60, $70 million valuation, they need to show $7 million in net revenues on an annual basis, things like that, which most of them aren't going to do. So I think we're going to have a second round of shocks a little bit at the seed to Series A when these guys run out of money as well.
And when we spoke yesterday, prior to the session, we were all optimistic that this adjustment is going to take a short time, but then things are going to really pick up well. And Tambi, you were touching on your forecast on how do you think the market is going to perform in the next, let's say, short term, 2 years, 3 years. So do you want to highlight a little bit your, crystal ball forecast to the future?
I wish I had a crystal ball. I think that, as everyone mentioned, valuations are going to be more realistic. Maybe we'll be able to see a pre-seed company at 1 million valuation. It's a new unicorn for me, trying to find that, which we used to see 6-7 years ago. So, and which means that people will be more frugal with their spending, and people will bring in the right team and not try to raise so much money so they can hire the most people possible, because also that's not the correct measure. But I believe that this is the time where investors are going to be focusing on they're going to be voting on different kinds of companies. As you see, we mainly invest in SaaS, and I'm hearing a lot of SaaS and seeing SaaS accelerators and things like that, which means that people are waking up and know there are different business models. Maybe it's not all about food delivery and
there are many sectors that are
that you can
disruptive.
Generate money with. So I feel the region will start focusing on things that have worked in other regions, which is good. But in 2 to 3 years, I think things will be back to how it was. The recession will not, it seems like the word is receding, I would say, but our region, because we can do things differently. We don't have to fall with the whole world the same way. We can do it in a different way.
Yeah, actually, it's a dynamic region with various, very young population, very vibrant, lots of support. Again, Mohammed, it's fascinating how we are seeing more startups coming from Oman to the region and from the region to Oman, which is great. What are you saying? What kind of advice you would give a startup that is raising now? I mean, we heard the word realistic, and realistic is always good. What other advices would you give a startup that's maybe in the audience that is now raising or going through that maybe unknown phase of what's happening in the market? What's the adjustment? What are the challenges? What sort of an advice you would give?
So for us, given the space we're in and the stage, most of the startups that we invested in, they're really early, so they have that unfair advantage of not being hit as hard as others. But most of the things I tell our founders when I mentor them is like, you need to look at your next funding round. Do you have the metrics to match that or not? So you need to be realistic. You need to look at profitability as soon as possible, because that's one thing that will give you more control and not be at the mercy of the next round of raising, where you lose a lot of your equity because of that. Because most VCs will look at potential startups, and if they can take a bigger chunk of it, if they can, because they see there's some potential in that. But most of the founders, if they look at profitability, look at the team being, as Tambi was saying, being frugal, try to hack as much as possible. A lot of founders are trying to do everything from scratch without actually validating a lot of the problem sets. So I think problem discovery, that's something that they need to constantly do. If they don't, then they'll run into problems and then they'll run out of money. That's one. We have a lot of examples of founders that are trying to do something and then they realize, like, wait, we're almost running out of money. Let's see if we can pivot or not. So that's something that we always tell the founders, that they need to be very careful. That's one thing. But another thing, like my personal point of view is that destination is overrated. The journey you should concentrate on the journey.
Absolutely.
You don't know if you're going to be successful or not, but the amount of learning that can happen, let's say good learning, or that healthy learning that you can capture during your journey will help you in next round of next startup or the one after that. But if you're concentrating on the destination, you're going to miss out on a lot of learning during that path. And this is something that a lot of VCs look at if they invest in one startup. Regardless of the success or failure of that, they're going to look at them to invest in them again. So that's something they need to be careful of.
That is always a great advice. Enjoy the journey. Like, that's an advice for the startup. Maybe very quickly, Hasan and Tambi, what advice would you give to a up-and-coming VC coming to the region, whether global or local regional one that is just starting in this environment? Quick couple of advices.
Sure, I think this is probably the best time to be deploying capital. We're seeing with this adjustment in valuations, things have gone back to a realistic sort of term, where actually you're deploying $1 million to $2 million of valuations between $5 to $8 million at seed, lower than that at pre-seed, a little bit higher at Series A. So in this environment, if you really are coming into the market right now, you're coming in at a pretty good time to be deploying. I think the key advice I have for a lot of new investors is, like, don't ever be a price taker. You need to really make sure that you're negotiating terms with the founders, and you negotiate terms that make sense as well. And so that's probably one of the first things. And then in addition to that, I think fundraising will be hard for funds because there's so many other asset classes that are interesting as well. But I think this really is the best time to be investing in startups in the region.
Great. Tambi?
I would start with talking to the VCs in the region. I think a lot of outside capital is taking some bets, doing some things without actually talking to people on the ground. And sometimes they forget that all entrepreneurs, including ones in our region, watch videos, learn online, and they know how to talk the talk. So they shouldn't take everything at face value. They should maybe do some due diligence, because every question you ask the founders, it actually helps them become better.
Of course.
So I would like more diligence on us as a region.
As a region. Wonderful. I think we have a couple of minutes for a couple of questions, very quickly, from the audience, if any. So if anyone has a question for the panel on the investment, any Abdurrahman, and yeah, just wait for the mic quickly.
We get the ball
Tfadal Abdurrahman, then the lady at the front. Tfadal.
All right. So we keep hearing two arguments. One is talking that our markets are linked to the US. Any effect there affects us here. If there's a downturn, then we all reconsider valuations here. And then we hear the opposing side of, no, if you look at Dubai and Saudi, you're not seeing layoffs, you're not seeing decreased spending. Therefore, like, which is it? Like, are we linked at the hip or are we not?
Who wants to take on this?
I'll take that
Yeah?
one. We are definitely linked. Like anyone who says we're not linked basically wasn't around in the previous downturns. What happens, I think what the issue is with us in the region is we're just slow to react. And so it'll hit us, and it's gonna hit us. It started hitting us earlier in certain markets, but it will also hit us in other markets like Saudi and the UAE within the next few months. I remember 2008, when we had the global financial crisis, everyone's like, we're great, nothing's gonna hit us. And then about a year later, everything sort of went to down. And so I think that's the case. Like anyone who is saying that we're completely isolated from the global trends and what's happening around the world is kind of kidding themselves, because every time you benchmark a venture capital investment, if you're benchmarking against Silicon Valley, for instance, now, right? Like that, everyone's like, oh, we want to get a Silicon Valley valuations. Well, Silicon Valley valuations now are lower than Saudi valuations. So like, you know, what's going on with the world? And Silicon Valley is a massive ecosystem, history of exits, great talent, and then Saudi's just emerging as a market. So this whole like concept of we're completely isolated from what's going on in the world is completely false. It just takes longer for us to really realize that. And I think, because the initial shocks that hit the rest of the world are oil related, and oil goes up and we're all happy, we're dancing and stuff, but then eventually things don't always end up that way. So we are not isolated in any way, shape or form.
I hope that answered your question, Abdurrahman. So we ran out of time. So to conclude, will the investment bubble burst? We don't know. Definitely there's an adjustment. Adjustment is always good. Correction is always good. Being realistic is always good. We're very optimistic about the future of the market, which is very vibrant and witnessing continuous growth. I'm an optimist myself, so I always look at that. And I thank the esteemed panel for their time and for their knowledge and for sharing this great time. And please stick around later for any questions or one-to-one with them. Thank you very much.
Thank you, Omar.
بالأول بليز بقدر أطلبكم طلب كلياتنا نحط موبايلاتنا silent please. During the sessions عم نسمع أصوات عم نسمع texting. So please, thank you.